You're supposed to use the podium one. Right. Good morning once again. Good morning. Thank you. That's much better. And today is day 2 of the Business Ecosystem Summit. We kicked off on a high note yesterday. And today is where we get to dive right into everything. I am co-hosting with one, Brian George, and until hapatiwe huku ni home ground. Okay. So we have our theme, which is investing in business ecosystems, and this is what we'll be focusing during this 2025 summit. This is the second time it's happening. 2023 we were here, and there was so much great success that happened. Partners came on board, investors came on board, so it was a really, really great summit that happened. And this time round as well, we are expecting that there will be networking, there will be collaboration, and there will be so much that we gather out of here. Brian, please come. Thank you very much. Please clap for my co-host. Yes.
Mic yangu iko na credit, walikuwa wameenda kuweka.
No, you have it.
No, I have it.
Yes.
Joturwa untie. Aya washwali. Good morning.
Good morning.
Uchieo. Uil. Uchie. Okay. Okay. Weweka kanyo. Yes.
I'm waiting for where I'm supposed to ahinya. Because it is what you taught me.
Okay, so oyaore.
Ahinya.
Yes.
It's there. Okay.
That's it. That's
Right.
exactly it.
Yeah.
All right.
Okay.
Just as she has alluded, today we are getting into the meat of it. Why we are here to discuss a range of issues: capital, market access, suitability to, have your products in the market, and so much more. Yeah. So, 4 panels today. It's a heavy day. We're trying to keep it as tight and value-based as much as we can for you to be able to achieve as much as you possibly can out of this conference.
Yes, and just maybe to lay the grounds, we still have our cameras around. So if you happen to take a picture, our hashtag is BES2025. BES2025. I know we are on different social media platforms, so we'd appreciate if you can do that hashtag, right?
Great.
Yep.
And I hope you're networking.
Yes.
I hope you're making friends.
Yes.
I hope you are. I've spoken to some of you, and it's been lovely interacting with all of you people from this side, and so it's a beautiful thing. How many of you watch NTV here? Staskia vibaya. How many of you? Let's see you guys again.
Yes, we watch.
You
we
folks
watch you.
have a special place in heaven with Wi-Fi and a bathtub. And for the men with 2 wives.
And charger connection.
And a charger, yes.
Yes.
All right.
So just to highlight a few of our partners before we call the panel, or rather before we get the keynote address to kick us off, we have partnered with Arise AIIP. We have KCB Group.
Correct.
As well.
AR Insurance and Hospital are here with us.
Yes. We have Kenya Climate Innovation Center, KCIC.
NSSF is featuring prominently. Once again, we'd like to appreciate you in a special way for being here.
Med Aditas as well.
Correct. Heifer International, we didn't mention them yesterday, but they are a big partner also in the forum today.
As well as Export Processing Zone Authority, and we are going to have a whole discussion about our industrial park, and I know they're here, they are our partners.
How could we possibly forget the county?
Kisumu County.
Kisumu County government, and we have had such a beautiful show of political goodwill by the presence of no other than His Excellency the Governor right here. Yesterday at the opening forum, so we are truly, truly grateful to the county government of Kisumu.
And the Lake Region Economic Bloc as well. They have shown us such, they have given us such great support, as well as Swed Fund.
Correct.
Yeah.
All right, good to start. I think we have quorum. I think we have everyone here on board. So we're going to call on one speech, one remarks that will be made.
Yes.
You want to introduce that?
Yes, please. We are going to have our speech, or rather our opening speech to set the day from one Mr. Kirinya Kithenji. He's in the building. Yes, from World International,
Yep.
who is a Kenyan strategy and finance expert with over 15 years of experience driving growth for small and medium enterprise across East African. Across East Africa, and that's the reason as to why we're here for them. And then he's also a consulting director of strategy and advisory at Wild International Limited since 2015. And he leads in initiatives in finance, business planning, organizational development, and entrepreneurship training for SMEs and nonprofit organizations. And his approach combines rigorous strategy formulation with practical coaching, enabling businesses to secure capital, expand markets, and strengthen networks and build lasting partnerships.
Ladies and gentlemen, the conversation today is not just about accessing capital, but how you can be good at your business. Go-to-market strategy, market access, and so much more. And that is what Mr. Kirinya is coming to speak about.
So please, a warm round of applause for him as he sets the day for us. As he gets, we're going to tap into the 15 years of experience. So,
right?
Please, he's also in the panel.
In like 10 minutes. 15 years condensed in 10 minutes.
In 10 minutes.
That's genius.
Yeah, he's genius.
Karibu.
He's here, Mr. Kirinya Kithinji himself.
So, ladies and gentlemen, good morning. Right, so thank you for the opportunity to contribute to this timely and transformative conversation. Today, we are asking ourselves a critical question. How do we unlock the full potential of SMEs by channeling the right support, capital, capacity, and collaboration where it is needed most? I'm honored to represent Wild International, a leading growth, strategy, and enterprise development firm that primarily supports owner-managed SMEs. For over 2 decades, Wild International has been committed to building, scaling, and strengthening owner-managed SMEs through business coaching, leadership development, and tailored enterprise support. Our mission is simple, yet powerful: to empower businesses to grow, thrive, and transform the communities they serve. We believe that when SMEs win, Africa wins. We have known for a while that SMEs are the engine of Africa's economic transformation. For instance, we know that MSMEs account for nearly 80% of Africa's workforce and are the lifeblood of local economies. Secondly, over 80% of these enterprises lack access to formal financing, and the continent faces a huge financing gap of about 330 billion US dollars. That is twice the GDP of Kenya. This gap is not just about capital. It's about systems. Entrepreneurs with potential are stuck because they lack structured support, market access, and strategic guidance. At Wild International, we address this challenge by equipping SMEs with the clarity, the tools, and structures that they need to scale sustainably and attract both the financial and non-financial resources required for scaling. More specifically, our approach blends 3 items. Number 1, business coaching and leadership development to strengthen entrepreneurs from the inside out. Secondly, enterprise development programs that prepare SMEs, especially the ones that are owner-managed, to absorb capital, manage risk, and scale sustainably. Our third intervention is partnerships with financiers, accelerators, development partners to bridge the gap between entrepreneurs and the capital markets. We support over 200 owner-managed businesses every year, helping them streamline operations, improve governance, strengthen financial management, and unlock growth opportunities. So what can we do to close the financial and non-financial resources gap that SMEs face daily? To do so, to unlock meaningful economic impact, SMEs need three things. Number one, patient, flexible capital that recognizes their realities and stages of growth. Secondly, structured, non-financial support that enhances governance, systems, processes, and accountability. Thirdly, ecosystems that create linkages to markets, to supply chains, and networks. This is why Wild International partners deeply with these institutions, be they development finance institutions or financiers, corporates, or even county governments, to ensure that the SMEs are not only funded, but fully succeeded in other relevant ways to succeed. Which brings me to the Business Ecosystems Summit. The Business Ecosystem Summit is exactly the Business Ecosystem Summit is exactly the kind of platform that Africa needs. Why? Because it brings together policymakers, financiers, entrepreneurs, and ecosystem enablers who create a space where capital meets capability, innovation meets opportunity, and ideas meet implementation. The Business Economic Ecosystem Summit is not just a forum. It is a catalyst for shaping the future of enterprise growth in our region. In conclusion, I have shared Wild International's perspective as an enterprise development partner committed to build strong, scalable businesses. But we are only one part of a much larger ecosystem. True change happens when visionaries, financiers, bold entrepreneurs, dynamic support organizations, and governments work hand in hand. I'm honored to be part of this conversation and look forward to the insights, partnerships, and possibilities that will emerge here today. Asanteni.
Unless you'll need the laptop, I think I'd make, okay, it's okay. Unless you need the laptop, because you're on the panel, I think I just want to invite you to go to my extreme right. There you go. He's part of the panelists. Let's appreciate him once again. The next panelist we have is Siongo Kisoso, the Regional Director, East and Southern Africa, in charge of Swedfund. Siongo, if you're here with us, please take to the next left to Mr. Kithinji. Up next is Martin Irungu. Martin joins us from he's the investment lead at Kenya Climate Innovation Center. Martin joins us right there. Great. I think the protocol team wants to furnish us with more facilities right here. We are showing the capability of IMC people putting together a world-class event like this one by appreciating them. And allow me to give each of you 30 seconds of introduction, just so that we understand a bit more what you do before we start with the hard questions. All right. Please, once again.
Good morning once again. So my name is Kirinya Kithinji. I am the consulting director at White National, which is a management consulting firm working with small and medium enterprises, especially the ones that are owned and managed, owner managed. That's a brief about me.
Okay. Up next.
Good morning.
Good morning.
That's better. So my name is Siongo Kisoso. I'm the regional director for East and Southern Africa for Swedfund. Swedfund is Sweden's development financial institution. We are owned by the Swedish government and financially backed via Swedish taxpayers' money. In terms of mission, we make investments in sustainable businesses in developing countries with a view to contribute towards poverty reduction through sustainable economic growth, creation of jobs, and climate action. Our investments come with capital, expertise, and partnerships to create measurable results. Kenya has been a key part of our portfolio for a number of years due to its dynamism, the opportunity for growth and diversity. Kenya was the first office for Swedfund outside of Stockholm. We set up in 2007. We have 4 offices now: Nairobi, Abidjan, Bangkok, and Kiev. Kenya is the biggest single country within our portfolio, contributing to about 13%. And we currently have about 35 investments across the country. So that's a bit about Swedfund, and looking forward to contributing to this conversation today. Thank you.
Good morning. My name is Martin Irongo. I work at Kenya Climate Innovation Center in charge of access to finance and investments. Pleasure to be here. And Kenya Climate, in a brief, does accelerator and incubation of small and middle enterprises aligned to climate mitigation and climate adaptation. So these are enterprises aligned to agriculture and sustainable agriculture, waste management, commercial forestry and nature-based solutions, renewable energy, and also waste management. Pleasure to be here and look forward to your interaction.
Great. Now, the panel we have today with these panelists will be focusing on access or unlocking capital for economic growth. How many here struggled? I just want us to establish the ground first of all. How many of us here struggled with setting up a business because of capital? This is a story I know too well, so it's okay. Even CEO Jean Oromo struggled. And hey, capital here is not just the liquid capital, which is finances or money, but we're talking about fixed capital. So we'd say things like your laptop, if you're starting perhaps a cyber business, piece of wood, what else constitutes capital? Human capital in itself is capital, the human resource. So, but we will, of course, focus more on the liquidity bit. I am inviting you to join our conversation. We are here because of you. This is not a lecture. We have this conversation so that we get feedback from you. So at the end, we would expect you to have questions, rejoinders, things that you would like to come up with. I'd like to start with Mr. Kisoso. And you have quite a beautiful portfolio across Africa and other parts of the world. And I'm glad that you're handling also the middle to low income economies in Asia, and with focus on Kiev, which is Eastern Europe. My question to you would be, what financial models have you seen work in these emerging markets that could be imitated or more or less copied, more or less adopted in Kenya to be able to advance more capital access to these small and medium enterprises?
It's a very big question, but I'll just share a few insights. I think really to develop a model that works, we have to really understand what is the root issue when it comes to financing SMEs. Access to finance for us is, a critical topic. and one of the key pillars to a number of the interventions we have. And I think there are three broad issues when it comes to access to finance, particularly in Africa. SMEs tend to differ in Asia vis-a-vis, even Eastern Europe, where we finance different businesses. I think the first one is, the credit infrastructure, in Kenya, in African countries, is still very young and doesn't fully meet the needs of the SME segment. Credit infrastructure, what is this? We're talking about credit scoring. How do financial intermediaries and those who provide capital to SMEs, actually assess the credit worthiness of SMEs? We're talking about guarantees. Are there any institutions or mechanisms that are providing some risk mitigation for financial intermediaries? We look at issues to do with collateral recovery, collateral registers. If borrowers default, how can I, as a financial intermediary, begin a process to recover assets? So these are underdeveloped, and for that reason, a number of financial intermediaries tend to take, less risk, and there's a big gap between actual risk and perceived risk, and this credit infrastructure has a lot to do with it, and it's a very big topic. The second one is a lot of financial intermediaries have not designed products that actually meet the needs of MSMEs, SMEs. There are features where, a lot of collateral are required, tenors tend to be short, information requirements tend to be, quite difficult, if not impossible, for a lot of businesses to meet. So, that lack of tailoring products to the audience of SMEs has been a challenge for access to finance. And there's also, some part that is on the side of SMEs. A lot of SMEs do not have the, capacity to take on debt. And this capacity is measured in a number of ways. We're talking about being able to demonstrate that you have financial records, that you have, some kind of processes and systems that allow you to have sustained growth. And here I'm not talking about big IT systems, but just ways of working that create a sustainable business. And being formal and, being part of the tax system, being registered and compliant with all, different aspects when it comes to registration, etc. So these are three sort of big challenges, and I think any intervention has to address these. And recently we invested in an SME local currency debt platform in Zambia, which I wish to share because I think it holds immense potential for SME financing. So we invested in an SME platform in Zambia alongside NAPSA, which is the public pension in Zambia, an equivalent of NSSF or PSSF here in Kenya, and British International Investments. So this particular platform, offers loans to SMEs at longer tenors. They can do 5 to 10 years, while in the Zambian market, SMEs typically get loans up until 5 years. The collateral requirements are a lot lower, more flexible. Working capital is considered, part of the collateral that can be taken up. And beyond financial capital, this platform brings what they define as knowledge capital. They give business support services to support SMEs bridge this capacity issue. And I think the development of these sort of platforms hold a lot of potential. And development financial money together with local institutional capital can come in and develop these. Beyond that, in the local market, we have a number of financial intermediaries that we support with financing, such as Coop Bank, Victoria Commercial Bank, Platinum, COP. In Kenya, they have Platinum Credit and Premier Credit. And I think some of the things we have seen work well for SME financing through these institutions are financial literacy programs, which really try to bridge the gap when it comes to capacity. But I think any model that's developed has to be tailored to the local environment and really address some of these key issues that I've mentioned.
Yeah, I hear you when you talk about tailoring even things like credit scoring, because that's a continuous conversation, and I think I'll bring in Kithinji on this one at some point, about even the credit scoring merit for a farmer. Why does it have to be the same as a real estate? Why does a woman-led business have to go through the same as a male-led? And I'll give more perspective to it. Data from the Central Bank of Kenya shows that women are less riskier to lend to. Women and women-led enterprises. And I think you should clap for yourselves for that. As women take risks to invest, I think the non-performing loan ratios are to the advantage of women in terms of compliance. Us men, we are we are unique in our own way, and we love ourselves like that. But allow me to bring in Irungu on this next point. And my question would be to you, those issues that Kisoso has highlighted, are they any unique or different from impact-led businesses? Here we are talking about small and medium enterprises that are focusing on, say, climate action, focusing on population promotion, focusing on things like sustainability, etc., etc., the circular economy, for example. Are the problems unique? Because an entrepreneur will be here and giving you an example of, say, a business that they are doing from waste paper or banana peels or whatever. And people get excited when they hear grants, because I know the conversation becomes very different for impact-led businesses. Are the challenges any different?
Thank you, Brian. Ideally, and the first answer is no, they are not.
Okay.
And this is so. As at the point an entrepreneur sees an idea, conceptualizes the idea, puts the right capital, whether it's from friends, we like saying from friends, family, and fools, puts that capital together to start what he intends to do. At that point in his mind, impact is correct at the back of his mind, but profitability and sustainability are the first items that he's looking at. So in this context, then, it's very clear to him, and the challenges, as outlined by my colleague here, are exactly the same. It's unfortunate that probably then at the current financing, I don't want to call it banking, but current financing model that we currently have tends to put aside the benefits that entrepreneur brings over and above his financial capability. I say this is because if today I walk into a circle, will they look at my business model, or are they financing me by the fact that I can afford a lorry? So in this case, are they financing my business model, or are they financing the truck? That's a key question that we keep asking them.
Yeah.
But, well, they keep blaming their financing and the structuring and the regulation. But until when can we continue to blame if other countries have moved to other models to assist them, then be able to finance that other person that is doing much more over and above margins of revenue? I say this, for example, let me give an example of a client who say is doing waste collection within town.
Yes.
So he's doing several tons of waste collection within a city, making X times revenues as any other shopkeeper is doing. So how then do you evaluate that business model and give him the same terms for an asset financing for a truck? Yet his impact is 10 times double who was probably just delivering goods. And that's the mix that we still are unable to unravel and give a solution for. That said, then we also may need to also relook at our financing model for SME. And this is probably one of the things that contributes to their dying between year 1 and year 5, as we keep saying. Because then we are not providing for them financing that addresses their needs. At the point they were financed for friends, fools, and relatives, after that they probably got a loan. But they put it in their business as equity. But in the truest of sense, was it equity? Debt. So then their leveraging is 80 times, 100 times, and if it can be even 120 times, it can be. But we want to look at those businesses as though their leveraging is 60, 20%, and therefore add them more debt. So in 6 months, then you are headed to collection, you are headed to auction, you're headed to closure. So if we then can be able to look at financing models that can look at my idea, that can look at my business model and finance it with 10, 15-year range, then you give more life to that business.
So you're against over leveraging.
Yes.
I don't know why that took long to respond to, but I'll ask Kithinji that question. But before I ask him, let me ask you, how many of you here start a business to fail? Okay, we are clear on that. How many of you here start a business to remain small? You know, I just want a small business that I'm doing. I feel comfortable around that, and then that's it. You know? How many of you have dreams of expansion one day to go international, perhaps increase your market share and the like? Ah, there you go. Half a clap for yourselves. Great. Kithinji, here's now the question. Most of them, entrepreneurs, have the hope that one day after they've started their business, they're going to go big. You are starting with the vision of a corporate in mind. So you're starting your Akinyi and Sons, Wambua and Sons, Agrovet, or whatever. But you perennially remain small, perhaps because of your corporate governance structure and the like. And so my question to you is, why do small and medium enterprises struggle? Aside from the corporate issues, which of course are understandable. And my host, the other day we were just talking and saying that there's a university in Kenya that has actually introduced a course on managing family business, succession, adoption, passing it on to the next generation, etc. But why do small and medium enterprises actually love this field? For we are a small business. Sisi ni wakulima wadogo. You guys say it better in Kikuyu. You tell me what the phrase is. Proceed.
Okay, first and foremost, we need to realize that growth is a function of opportunity. So with the assumption that businesses are set up to respond to opportunities, so you can see the size of the opportunity is actually what determines your ability to grow. So that's externally, looking out. It's the size of the opportunity. But of course, all opportunity is moderated by competition, right? I'm doing mandazis, he's doing mandazis, you're doing mandazis. So all these people have 4 people to choose from. So out there, in terms of opportunity, it's always moderated by competition. But now looking inward, it's 2 things that we have identified as we work with SMEs. And the first one is capital, which is the discussion around here. Capital is usually a big constraint, but I have a surprise for you and for the rest of the team. If you look at capital is not the only resource that is required for success. And I'll prove that to you in very general terms. If you look at the listed banks in Kenya, I'm only talking about the banks that are listed in the Nairobi Stock Exchange, and I think there are 7 of them. As at the first quarter of first half of this year, the non-performing loan portfolio was 600 billion shillings. 600 billion shillings. The non-performing loan portfolio was 600 billion shillings.
The same as spending bill.
For the listed...
Sorry.
Something like that.
Did I start? Anyway, proceed.
for the listed banks, and there are only 7 of them. So we've left out the other, is it 30 something?
yeah,
Because
31
there are
or
42
thereabout.
banks. I'm just
Yeah.
talking about the ones that are listed in
That
the
are
stock
listed.
exchange.
It's okay, it's okay.
Now, out of those non-performing loans, 40% of those non-performing loans, which is something like 200 billion or even bigger than that, is non-performing loans lent to SMEs. What does that tell you? Somebody received money and she's unable to pay. So is capital the only problem? It is not. There are other resources, and I alluded to that in my opening speech. Non-financial resources, like technical advice. How do I make a cake, for instance? How do I look for markets? Those things, and I'm happy our friends are doing the same. What is technically required, referred to as technical assistance? How do I comply with taxes? They also contribute to the success of enterprises. Let me narrow down to now capital itself. There is something like right capital. What does that mean? It means right capital means it's capital for the correct purpose.
Yeah.
Secondly, right capital means it is the correct instrument. Yes. You're not taking a loan when you should be taking a grant or something like that. So it's a right instrument, right purpose, right instrument. And the other thing about capital, you need the right partner, the right financier. Should we be working with Sweet Fund
Yeah.
or KCIC?
Yeah.
So you need the right partner. And then lastly, the terms of the capital that you have, they need to be favorable for you.
Correct. Lovely. Could we appreciate him just for those solid points? We are agreeing it's not always about the money. It's also about how we are wired, our corporate structure and the like. And as you were saying that, I just remembered a quote from one financial advisor. They say that debt is like a loaded gun. Depending on where you point at it, it's going to benefit you or it's going to finish you. So if you point it to yourself, you're shooting yourself literally and the other way around. Ladies and gentlemen, I'd like to bring it to your attention that we are managing time very well. We are 25 minutes away from finishing this panel, and we just exhausted the first 20 minutes because this panel is supposed to take 45. This is another invitation for you to store your questions. We'll take them at the tail end of this panel as I bring in Mr. Kisoso once again on this one. That we have seen a flurry, a beautiful introduction of a lot of development finance institutions, or DFIs, that's what we're going to call them. And this has been mostly motivated by things like lending rates that have been high for a very long time. And so DFIs are coming with either blended financing or more affordable financing at very affordable rates and all that. However, there is still a bit of a feeling of a blanket policy environment, including those of DFIs. What kind of regulatory environment would you like to see for DFIs to be successful in this part of the market, considering we're addressing a market that is dotted with a lot of small and medium enterprises that their market capitalization is still relatively low compared to other markets, and some of these challenges, teething problems like corporate structures, are still not there. Yeah.
No, thank you for the question. I think from a DFI perspective, maybe I can share, what we are. Sweat Fund is one of many, European DFIs, and there are DFIs, from other, geographies such as DFC from the US, IFC, etc. So most, if not all, DFIs are commercially minded, impact-driven, long-term investors. So there is a perspective of offering commercial terms, but there is a view that this should be done to be catalytic in areas where there are limited commercial or private investors that are willing to participate, given there could be differences between actual and perceived risk. Business models might be young, and track records may not have gone long enough. So I thought that's just important to share in terms of context. Given we are long-term investors, what kind of policies and regulatory considerations should be made? I think at a macro level, we invest you know, it's sometimes up to 15, 18 years in businesses, particularly when we're looking at infrastructure. So being able to have a stable macroeconomic environment where, you know, inflation by and large is stable, predictable, currency is convertible into into our currencies. So, for example, in Sweden, at Swedfund, we invest in dollars and euros, sometimes in local currency, but we need it still to convert to be able to get back to our reporting currency. So the macros have to be quite stable to have that patient long-term capital. When we look at sort of the policy and regulatory environment, I think policies have to be fairly predictable. We're making long-term investments, so policies around registration, compliance, contract enforcement, etc., have to be fairly predictable to be able, you know, to do business on a long-term basis. At Swedfund, we invest both directly into businesses and indirectly into financial intermediaries who then go and, you know, invest either debt or equity in businesses. So I think having good prudential guidelines, so these are the rules that govern financial intermediaries and ensure the financial system remains safe, conducive for business is quite key, given we work quite a lot with intermediaries in the market. So I think those are some key considerations when it comes to policy development and regulatory considerations. But I would say, you know, Kenya has been the biggest part of our portfolio for over 20 years now. So we were fairly happy with the way things have been managed and will continue investing here for the foreseeable future.
Okay, lovely. Thank you for those recommendations. And I think for me, the sense I get when you talk about things like currency stability, because you see, ideally in this part of the market, you'd be lending in Kenya shillings, but the investment is coming down here in USD, and those currency fluctuations, from an unfunded income point of view, you would expect, of course, to gain a lot more when the currency fluctuations are in your favor, particularly. But now burdening the small and medium enterprise, I don't know how you're going to respond to that. Perhaps later on, let me bring in Irungu on this one. We are drawing solutions, Mr. Irungu, and this is now you speaking to the owners of these businesses on how they can get ready towards deploying growth financing properly in their businesses. What are some of those practical steps that they need to take to be able to appreciate capital and deploy it in the right channels? And I also dare say when to also borrow, because Kithinji spoke about it. At times when you just don't need the capital and it's just not necessary. Yeah.
Thank you, Brian. Ideally, as an SME, before you even approach a third party to look for external financing, the first item is to look internal. Okay. And by first looking internal is are my books ready?
Yeah.
How do I keep my records? Do I bank through my phone number? Or do I bank through my bank or my till or my pay bill? These are some of the things that then a third party, before they invest, they would want to come and see that you do practice and has been doing that for a while. Yeah. So as we also blame lack of capital, it's also then how are we ready to receive the capital? Yeah. How do we separate our day-to-day with the business? Is it probably the business that is probably financing our personal rents, our personal expenses? Have we separated our day-to-day activities with the business itself? These are some of the things that then will limit you from attracting any capital to you. The other item is then how have you packaged the business? Be it branding, be it the product itself. Does the product have a life outside you? It could probably, it's likely that the product is you. So these are then the risks that some of the capital providers will look at and say, the risk for this one is too much. There's something that key investors call key man risk, and where then they are able to evaluate and see that the risk is just too much, then their revenue, their return that they would demand from you would probably not be acceptable for your business, and therefore the easy option is to walk away. Lastly on that is then, as you approach financing, we need to look ourselves and ask ourselves, is it the right time to take debt, and what form of debt? I'm saying that because if you walk to a commercial bank, you are probably looking at 15 to 18% interest on debt. Is that the debt that probably your business is ready to? Or are you attracting probably, allow me to use this word, Shylock debt? Shylock debt that you think probably have a quick deal, have a quick order that I am seeking to supply, so in 2 weeks' time I should be able to pay. Yeah. And since it's quickly available money, then you pick it. Before you know it, then the money did not come as expected on the other end, then your items are being picked. So these are the types of instruments that I'm saying we must then evaluate. Is it, am I ready as an entrepreneur to pick that type of debt, or do I walk away from that business with a view because I am not able to handle the risk associated to it? If that cannot work, then there are other forms of equity or financing that you can look at. You can look at other forms of financing like grants. Say you are in a certain type of industry, then you look at who within my space is giving grants, say in agribusiness. Then approach them and seek to understand what is it that they look at, so that then your application is aligned to what they look at, so that you do not get regrets and probably blame the parties, yet you did not communicate what they expected to see from the application that you made. The lastly, which is not very common among us, is equity. We tend to hold our businesses on our heart, to our hearts so dearly, but unfortunately we die with them. So while in the rest of the other worlds, equity is almost your first ticket available for sale, we have to agree that you cannot be everything in that business. If you have to grow, I like using the example of James Mwangi of Equity Bank. His shareholding is less than 5%. And that's the reason why the bank is that big. For us to grow as SMEs, we have to let go. You do not benefit anything by being 100% owner of a 5 million business, while you could be a 10% owner of a 10 million business, of a 100 million business. That said, look at then the various people who are doing equity. Make sure that then the person that you are partnering with is someone that you are aligned. Because you could probably be expecting, probably they are bringing money plus resources, opening doors, but that is not to come. So you must be aligned with what you are asking them to bring in equity for you. So that then if it's money, let that conversation be purely money. Have someone advise you on what agreements you need to have in place, and how then to structure them, and how to protect yourself, so that then years later you are not saying, I was duped.
Yeah.
That said, I don't know, Brian, I've covered sufficiently.
Pretty much you have, and I think the sense I get from your statement also around the shareholding business. How many of you know Facebook, Meta? Do you know the founder? What's the name? Come on, say it boldly.
Mark Zuckerberg.
Mark Zuckerberg. He owns just 11% of it. Just 11%. But the shareholding business aside, I wish we could have more time and talk about even buying out a business, because that is not an option that most people consider when exiting or when taking over a business. The way somebody winds up their business, especially when they're tired of it, is they go borrow against it and then they default and then the bank comes and clears. And then that's it. Wamemalizana na hiyo biashara and it's good riddance. But we should also, I think, talk more about how to take over these businesses. Let me bring in Kithinji as we close this panel. Kithinji, very briefly, what innovative financing models show the most promise in giving small and medium enterprises growth financing from your experience?
So one of the biggest struggles that MSMEs have is access to collateral. It's a big one. So you could have a valid business model, future-looking, great opportunity, but the kind of person that you're dealing with, the kind of financier that you're dealing with is demanding collateral. So the advent of credit guarantees, especially for women-owned businesses, is a big one, is a big one. And I'm glad Swedfund are here, and maybe that's a good place that you can invest when it comes to unlocking financing for what is perceived to be a risky segment, which is the SMEs. So credit guarantees are a good innovation. The second one, which is upcoming, is how we view risk and the tools or the instruments that we use to de-risk. I'll give us an example. If you look at the working capital space, about 60% of the SMEs trade with one another and they give credit. Am I right? They give credit to one another.
Is that a good or bad thing?
It's excellent.
Okay.
Yeah, there's a point. And as an SME, you also receive credit. Yeah. For instance, you come to this grand hotel, yeah, and you tell them, give me these services, I'll pay you after 30 days. And they give you credit. So the biggest source of credit when it comes to working capital is actually supplier credit.
B2B.
B2B. It's actually supplier credit when it comes to working capital. Now, what I do not understand is if an SME is willing to lend to an SME, because supplier credit is a form of lending and it is free. Am I right?
Yeah. There's no interest charged on it.
There's no interest charged on it.
Yeah.
Yeah.
Okay.
So why can't a bank come to me and tell me, Brian wants to borrow from me, and he says, you're a trading partner. Does he pay well? Does he pay his bills well? And then you use that to de-risk. In other words, it is peer de-risking. Why don't you go to your peers and ask, why don't you come to my peers and ask them, is this guy a good business person when it comes to paying trade credit? That's number one. And then number two, we all know that all SMEs have employees, isn't it? And the first employee is yourself as the owner manager. When was the last time you paid yourself a salary? That is number one. Number two. So number two.
Because you see, I'm here moderating events. Jean is going to pay me and then boom.
Exactly. So another second point here. I'm looking at innovative ways of assessing risk. Yeah. So if I have employees and I pay them consistently every month, does that not tell you that I am a viable business? I don't have salary arrears. So why don't you call my employees and ask them, do you have salary arrears? Then you can tell that I'm actually running a very good business. So I think the thing that I'm recommending here is, let's not get stuck in ways that have been handed over to us by our forefathers. If that is the case, then we'll still be riding horses to move from place to place.
Hey, so non-financial credit scoring. I think that's a huge one, and His Excellency the President alluded to it the other day also. Just that creditworthiness history, your CRB history, and that's it. If you want that, there's no issue about collateral, etc., etc. Ladies and gentlemen, we've managed time very well. We have 10 extra minutes to take questions, answers from you. Drew, please help me pass a microphone. Mimi sikukwambia ukuwe rafiki yangu. Questions, comments, answers, experiences. We'd like to hear from you. There's a question? Okay, great. The lady in black is passing around, picking your questions, comments, answers, concerns, something that perhaps wasn't clear. Looks like you guys did a good job, yeah? You explained it well. Oh, there's a question here. Great. Yes, proceed. Please introduce yourself, tell us what you do, and ask your question to one panelist so we can manage time.
Good afternoon.
Good
My
afternoon.
name is Violet Wafula. I am a tax educator working with Kenya Revenue Authority.
Yep. Please bring the mic closer to you like this so you can project.
Mine, I'm very impressed with what is coming through the panel. What I'd like us to hear more about is the issue of you cannot be everything to a business. I think that is something that business people have not known, and it's something that has really come out well. Maybe we can just have more on that. Thank you.
Okay, great. Any other comment, question, rejoinder? There's a lady here again. Hey, who ran the world? Who ran the world? There you go.
Okay, so good afternoon. My name is
the first reason you are chosen as the chairman of the cooperative is because of the values, the leadership, the skills that you brought that other members felt that they would benefit from, not entirely the shares or the amount that you had put in the cooperative. So that said, then means that you don't overly have to be the biggest shareholder to be then for you to be the chairman or to be a director at the cooperative. And same case will be even for SMEs. You don't always have to be the biggest investor in that business if that business is meant to grow as you would want it to believe. Yeah. Lastly, remember, as we said before, you choose between being 100% owner of a 5 million business or a 10% owner of 100 million worth of a business.
Great. Ladies and gentlemen, a big hand to Irungu, Kisoso, Kithinji, who have been here speaking to us. Irungu is from KCIC, Kisoso is from the Swed Fund, and of course, Kithinji is from Wild International. I'm going to ask my colleagues from the media to please come so that we take a group photo here. This would be my collateral for taking a loan. Please, could you arise so we could take a group photo? This would be my collateral now that KCB and ABSA and all these other teams are here. All right, let's have that photo as I ask the panelists on the second panel to prepare. All right. Ladies, you're going to forgive us. This panel was only made of gentlemen, but you guys asked all the questions, yes. So that's a beautiful blend. Sindio, let me invite my co-host, Agnes Osizi, to take over from here.
A warm round of applause for Brian and the panel. Hasn't he done a good job? He has. Thank you very much. So we are going to dive right into the next panel, and we are going to talk about agriculture. And as I explained that, we have our guests who will be a part of the panelists. We have George Olaka, who is the CEO, Arise AIIP Kenya. If he could make his way here. We have Dr. Hilary Nyanganga, who is a research fellow from the University of Nairobi. We also have Dr. Joseph Nyaundi, who is a researcher with Kenya Marine and Fisheries Research Institute. And also we have, yes, those will be my three panelists. If you see them somewhere, if they're somewhere, please a warm round of applause. I see Mr. George making his way here. I can see them so that we can dive right into it. So I'm sure by the time we're here, all of us, we have eaten something. Tumekula kitu, right? So it either came from the shamba or something. So agriculture is still the backbone of this country, and not just for employment, it's for food security. And we are going to look at something called value chain. Please remind me your name, ma'am. Cynthia. I loved when Cynthia say, you package spices and all that. So that is value chain. So I'm sure, okay, ladies go to the market. Men in the house, do you go to the market? You do? Okay, so you? With a list. So you go, you find at one point, kitungu is available, the next time is not available. Then you go and find their tomatoes, there's an influx, and then all of a sudden they're not there. But if you're able to turn those tomatoes into something and all that, that's what you're talking about. Raw materials, leaving the farm all the way to becoming finished good, and also global markets. And something called AI right now, and how it's going to help farmers, because climate change and all that has really played a part. So allow me to introduce my panelists, and also, as I mentioned you, maybe you can pick a mic and say something about yourself. Starting on my far right with Mr. George Olaka, who is going to bring his 27 years of experience across banking, multilateral finance, and industrial infrastructure. And as the CEO of Arise IIP Kenya, he has been there for a while, and he has played a role in advancing Africa industrial and economic transformation through sustainable investments and operational excellence. Please, a warm round of applause for him. He can say something as well.
Good morning and
Good morning.
afternoon.
Actually, it's afternoon.
Thank you for this opportunity. Thank you to the IMC people. The caveat is that I'm in the presence of doctors, so I don't know how I fit in, but let's see how we'll progress. You've said everything about me, so I don't need to add about that. But I think during the conversation, we'll have more to say. We are new in Kenya. It's about 2-3 years now. But I believe working together with all stakeholders, especially the government, and those who run businesses, because the SME, MSME of yesterday is the big industrialists of today. And I strongly believe that the MSMEs of today are going to be the major global industries of tomorrow and major providers of employment for the country. Thank you.
Right. Thank you very much. Dr. Hillary? Allow me to introduce him. He is a distinguished researcher and technology innovator with over 15 years of experience in agriculture research, development and resilience program across Africa, Middle East and Asia. And he serves in the research fellow in agricultural economics, data science, machine learning and AI at the University of Nairobi, where he works his work integrates analytics, AI-driven solutions into agricultural system to enhance productivity. Karibu sana, can say something.
Many thanks for this invitation and to participate in this great conversation. The big thing after this, I've seen so many young people here. Hopefully after this conversation, if you don't have an idea, you will have one. But if you already have one, you can scale it up. Many thanks.
Thank you, Karibu sana. And we have Dr. Joseph Nyaundi, researcher, Kenya Marine and Fisheries Institute. He's a distinguished researcher, and he has investigated the potential for blue growth in Africa. Great Lake emphasizes the recreation fishing industry in Lake Victoria, and he works to address environmental sustainability, which is a key issue right now, but also seeks to emphasize economic opportunities for local communities dependent on the vital water bodies. Karibu sana.
Thank you, Chair. Happy to be here. It's an interactive session. I'm sure by the end of the day, you will have learned a lot. Our work actually is very interactive. We deal with the community. We want to bring in what we call environmental justice. We want to bring in what we call community science, such that we bring in the socioeconomics part, which was missing in the beginning. You know, we want now the fishery industry to be from bottom up, not up down.
Bottom up.
You see, we create policies which we don't do what we call what? Community engagement. So we want to change the wheel about fisheries. Otherwise, what I know is that Kenya, we are very far. We are up and about to go about the fishery, only to increase the per capita consumption and also contribute a lot to the GDP of our country, Kenya, Lake Victoria included.
Yeah.
Thank you.
Right. And let's start with Mr. George. What are the challenges? Because we've had an issue with our products getting to the global market. There's an instance, you remember that one company that does the chicken and fries? We were told our potatoes cannot be taken to, KFC. There was an issue of our potatoes, they're not up to the standard. So what prevents Kenyan produce from going to the global market as finished goods?
Thank you very much. I think there are a number of reasons, and there could be as many as those in this room.
Right.
But I think I just need to touch on 5 key areas which are very uncompetitive. If you look at the way the society is set up in Kenya and the way we do at the first level of production, we find that there's a lot of fragmentation. So you get a farmer with half an acre, a farmer with 1 acre. It becomes very difficult to do agriculture. The problem or the requirement of export market is that it has to be sustainable, it has to be consistent, and it has to be at the volume that sustains that business. Most of the buyers, and typically what you do is that you don't export to individuals, you export to companies. Those companies have customers, and they have to provide consistency in supply, consistency in the quality of that supply. And therefore, if I'm to talk to 100, 1,000 farmers in Kenya, definitely the quality of the products they produce will be very varied.
Yeah.
And that is something that customers are not looking for. So we need to work on a way to defragment or to bring together all these systems in a way that we have scale and we don't have quality variations. And this has been done. It's been done across West Africa. I mean, if you look at tea, if you look at coffee,
Right.
if you look at avocado, it's been done at those levels.
Yeah.
So we just need to learn from what has been done, and as MSMEs, work in a program that can bring us together as opposed to the various disaggregations that we have at the moment.
Okay.
Give me a second. The second thing I would want to point out is lack of processing capacity. Because processing adds a layer that not everybody else can achieve. A farmer or a fisherman down in Muhuru Bay, there's a way they handle their fish. But there's a way, for example, Dominion Farms. Is it Dominion Farms or this farm that produces fish in large scale?
Sorry?
Victory Farms.
Yes.
There's a very big difference between how Victory Farms handle their fish and the way fishermen in Muhuru Bay handles their fish. So we need to be able to increase the processing capacity and capability even amongst the MSMEs and as a country so that we are able to access international market. Definitely one of the reasons why there's a challenge in accessing that market is the costs of our utilities, the cost of logistics in the country. If that is high, then all the businesses we have will definitely fail. That reduces the capacity, as I have said. That reduces ability to produce quality products consistently across time. But I also think that we also need to work on standards and compliance. For you to access external market, there's a lot of compliance, there are a lot of standards that you need to adhere to.
Yeah.
Not everybody can achieve that. And that speaks to the first point that we need to come together as a unified business people as opposed to everybody doing their own thing.
So, for example, if it's avocado farmers, if it's mango farmers, they come together to make sure that they standardize everything.
Exactly.
Okay.
And you have one certificate. So we don't have a situation where every every Tom, Dick, and Harry exports outside there.
Right.
But you have one unified body that is recognized as the exporting agency. If you look at tea, it is KTDA.
Yes.
So they are able to close any issues before tea gets to the market. I think that needs to be cascaded down to all the other commodities or products that we need to send to the external market.
Okay.
But relevant to this forum and relevant to the people in the room, I think MSMEs have also been excluded from the industrial ecosystem. Mara has said the MSMEs of today are the industrialists of tomorrow. So we need to work on a way that includes and brings together the MSMEs into the larger industrial scale. And if you look at all the 5 points that I have talked about, they are interlocking. They are meeting at certain point. Because if you bring in SMEs within the industrial space, then if I need to produce avocado oil, then I have one big industry that provides as a buyer of all the avocado in Kenya.
Okay.
That works both from an export point of view, but also enables the SMEs to scale up and to do better production and achieve the quality that we need to have. Thank you.
All right, thank you. Mr. Hillary, Dr. Hillary, we are in the era of AI. Everything right now is AI, and it's really helping, you know, people out here. But for MSMEs, how can they be able to leverage that to be able to close the information gap that is there in the market, and to make sure that, you know, they limit, you know, the farm in productivity, and also be able to get the market access?
Many thanks for that, and I want to pick it up from where my colleague has said.
Right.
He has strongly articulated the issues that affect our agricultural sector.
Yeah.
And one is that when you talk about standards, standards of produce that can meet specific markets, for example, export market, but even the local markets, the standard starts from production bit of it.
Right.
And as you produce it, and as you manage that crop, there are specific standards that you need to meet.
Right.
But where is it that the farmer needs to get this information?
Mm-hmm.
The farmer needs to get this information either from an extension officer, in
Yep.
many cases an extension officer.
Right.
And in this country and sub-Saharan Africa for that matter, we are currently running at a ratio of 1 extension officer to 2,000 farmers.
In fact, the government ones, no, they are very few.
They are very few. And that means that not every farmer will be able to get this information. So what we currently have is that I will wake up and I have my tomatoes there,
Right.
and I spray them the way I want, and you know, tomorrow I get them to the market, and if you were to measure the residue of the pesticides, then you don't meet the standards, and therefore you are kicked out of that market. So one area that AI comes to fail
Yes.
is this information gap. The farmer is down there, they don't have that information.
Right.
Okay? So at production level, you can use AI to provide agronomic information.
Okay.
This involves issues to do with the planting, selection of seeds, you know, how you are managing your crops, controlling of pests, among others. When you speak livestock production, then you're talking about feed optimization. Either, you know, animal feeds are made up of several ingredients.
Right.
And these ingredients are mixed in a certain ratio. While maize provides carbohydrates, you might not have maize. Maybe you have millet. But the ratio that you have is for maize. So you need a solution that can detect or can know the carbohydrates level of maize and carbohydrates level of millet.
Yes.
And replace millet with maize at the right ratio. We call it feed optimization. What can do that? AI. So that is basically at production level.
Okay.
Managing the farm and making sure that you produce the right crop using the right level of fertilizer, right level of pesticides, and all that.
Yeah.
Number two, at the level of disease control
Yes.
and
And
pests.
pests.
Disease is like an emergency. Allow me to be using tomatoes now that I've had there's a tomato processing SME in the house. And as soon as you get a disease attack, the sooner you solve it, the better. Otherwise, you risk losing your entire crop. The person who should be advising you on how to sort out this is an extension officer who has 2,000 clients
Other
to attend
farmers.
to. And therefore, you are bound to use your own knowledge. Okay? You don't know what disease this, so you walk into an agrovet and start asking an agrovet, I have seen something like this. Then they tell you, I have A, B, C, and D. This is a businessman. He's bound to advise you to take whatever he has on the shelves. His interest first. Okay? Not your interest and not the interest of your consumers. So AI gives you the opportunity.
Right.
I am very passionate about this because In 2015, my PhD was about disease and
And
pest
pests.
detection and management using AI. So AI gives you the platform and the opportunity to simply look at any symptoms that you can see in your potato, either using a photograph or symptoms that you can describe. Pick that information, and AI is able to tell you what that disease is, how to solve it, what are the available solutions, how to apply, and the frequency of application, and what to look for a solution.
Okay.
Okay?
Yeah.
So that's the second bit of AI. The third bit is on issues to do with precision agriculture.
Okay.
We have limited resources,
Right.
water, nutrients and all that. When you have limited water, how do you manage it in such a way that you are able to apply just enough for it as you reserve more water for tomorrow and the day after tomorrow?
Okay.
And nutrients as well. So optimization of resources like that is another one.
Mm-hmm.
The third one is now the issue of market access and supply chain optimization.
Right.
This is also very crucial. If you were to ask the SME doing tomato
Right.
processing, one thing, or I can articulate some of her problems. One, she's not getting enough volumes.
Okay.
And if she does, there is also the aspect of either getting some products late when their shelf life is almost running out, or they
Right.
have run out,
Mm-hmm.
and hence not suitable for processing and such. So because our setup is more of smallholder farming, okay, and like you said, even in the fish industry, aggregation is important because aggregation gives you the volumes. The volumes is what spurs or
Right.
what triggers industrialization or processing.
Mm.
You don't want to be processing 3-4 tomatoes because it is not going to make for you
Business sense.
Yet you're paying your bills. You can use the same resources to process 2 tons or 3 tons. But where are you going to get these 2 tons or 3 tons? Because my grandmother has half an acre of Dini, yeah. So you don't get all these tomatoes at once. So what is that will help you to aggregate this produce? Again, at the input level, it is usually, we call it in economics, economies of scale. When you have a tractor and you're plowing 10 acres of land versus when you have a tractor and you're plowing 1 acre of land, it is more expensive to plow 1 acre. Okay? And our farmers have small pieces of land. What is that solution that will be able to aggregate and to know that A, B, C, and D person in area X wants to plow? And one tractor can go there and have all their small pieces plowed.
Okay.
And that reduces their cost and makes their output more competitive in the market.
Okay.
AI does this, both at input level and output aggregation.
Okay.
But not stopping there. Again, when you talk about she has processed her tomatoes and all that,
Right.
where are you going to sell it? Where are you going to sell it? Are you able to aggregate demand of these several places and actually be able to articulate your demand and know how much volumes you need to produce for the market? Because so predictive models in AI are able to tell you all these kind of things.
Okay.
But before I finish,
Right.
the previous panelist also spoke about very, very important issues here, and which are very, very important in the ecosystem aspect of it, the financial inclusion bit.
Right.
And in the financial inclusion bit of it, he spoke about something we call the credit score.
Mm-hmm.
The credit score data for agriculture is very delicate. You know, agricultural loans are not the same as the other loans.
True.
Okay? And therefore, to find a credit score for my grandmother in the village, who might not be having a bank account.
Yes.
But
But she
she's a
still
serious
sells,
tomato
yes.
farmer down there, and she needs some capital. Is critical. Okay? So how then do you aggregate several data sets? Maybe from her transaction, M-Pesa transaction, maybe from her, CRB records and all those.
Cash and all that. Yeah.
And all that. And be able to provide her with some, financing so that she can do production. So
Okay.
that's another bit.
Okay.
Lastly, we're in the era that climate change and global warming is a big thing. AI predictive models, aggregating several data points from weather to all those, can be used to actually predict, expected rains, expected weather, expected drought. And with that, you can plan, actually advise you, AI can go ahead to advise you when to plant and all that.
Okay.
So AI cuts across the agricultural value chain and can provide several other solutions to that regard.
Right, thank you very much. When we have time, probably you tell us now, how do we get the information now to my grandmother to be able to know how to, we'll be able to talk about that probably in the next question. But Dr. Joseph, I'm sure very many MSMEs rely on, the blue economy. And how can they be able to unlock the value chain for themselves in this era?
Okay, Chair, thank you for that question. Actually, the aquatic system is quite en masse, is quite large.
Right.
Now that we are here and we are talking of micro, small, and medium enterprises, that is actually what we call what? Business Ecosystem Summit. As for me, as an aquatic scientist, I'm seeing it as an aquatic systems summit. It is Business Ecosystem Summit. In other words, let us look at it as the aquatic what? Ecosystems Summit. So how do we assist our people? The blue economy, what is this what we call the blue economy? Is actually is a sector which we conserve, manage, and then improve on it from the economic part of it, while doing what we call what? Sustainable fishery. The blue economy involves several sectors. It's not only fisheries. For example, we are talking of sustainable fisheries and aquaculture. Right now, we are talking of aquaculture in Lake Victoria. We have earthen fish ponds and we have cages. How are our people who are seated here today, who are here yesterday, they want to be here today, they want to be here tomorrow, until the end of this nice interactive session, how do we assist them from the blue economy side of it? I feel very much excited because I'm here with those people who want to make money. I have examples of some of us who come to our office as Kemfree. We are very much eager to help our people improve. We want economic empowerment and inclusive what? Trade, especially cross-border trade in fisheries. We want the value chain in fisheries to be improved by looking at each species. Right now in Lake Victoria, we have 3 main fish species that are commercially viable. That is tilapia, Rhochromis niloticus, Nile perch, Latus niloticus in the other language. And then we have what? Omena. In Uganda, we call it what? Mukene. I'm happy that we have some colleagues from Uganda here. I've interacted with some of them. In Tanzania, we call them daga.
Yeah.
So we have omena, we have Nile perch, mbuta, and we have ngege. Yes? Which is what? Tilapia. So how do we make it, how do we improve this for our people who are here? The small and what? Medium, micro, small, and medium enterprises people who want to get some credit from people like my colleague who has spoken about improving the economy and the value chain. We have KCB here, we have APSA and NCB and all that. So going forward, we want the SMEs to come on board and practice cage aquaculture in Lake Victoria sustainably. There is also blue economy involves things like tourism, ecotourism, and also improvement in terms of production of gears and vessels, which can be used for sustainable fisheries empowerment. So we want what we call economic empowerment
Right.
of our people. But we have disturbances, we have risks, we have challenges in our blue economy. This involves water quality challenges, which we also, as we go forward to do what we call very credible and profitable fisheries, we have what we call eutrophication in the lake.
Yes.
Where is it coming from? From excessive nutrition, which comes from even feeds. So we have organic matter loading in the water column, coming from what? What we call feeds. So we want sustainable aquaculture, sustainable fisheries in our lake. But how do we go forward? We have challenges of climate change.
Yes.
Climate change, this can be water warming. We have rising water levels in our lakes, especially now in, let's say, Lake Tufale lakes, which are freshwater lakes.
Right.
Lake Victoria included. Right now we have water level rise. It has affected what? Shoreline activities, which were either positive or negative.
Okay.
Climate change involves also changes in hydrology for the blue economy, where we have drought, we have floods, we have also heavy rains which affects our water, the lacustrine regions, like the lakes.
Okay.
Lake Victoria included. Which is the other challenges we have and disturbances? Let's look at biodiversity losses. As we practice this economic empowerment, which we want our people to do by looking at the value chain of one species, let's say ON, that is tilapia, we know that there are challenges of biodiversity losses and ecosystem health. Let us practice sustainable fishery, sustainable blue economy, but knowing that biodiversity losses is appearing in our water column. What does that mean, biodiversity loss? For example, reduction of fish species distribution and abundance. Why? Why is it happening?
Yeah.
Why is it happening? Because of what we might have what we call invasive species, invasive macrophytes like water hyacinth, pollution challenges which affect our littoral zones, that's the shoreline. We also have human activities along the shoreline or even in the catchment.
So
Let us not say that we are safe because we are in the mountains there. No, what we do in the mountains, like pesticides, organic and inorganic use of fertilizer in our farms, affect the fish down here in the Lake Victoria.
Okay.
My PhD, I'm happy he said about his PhD, I did something to do with pesticides.
Yeah.
Pesticides loading in water, fresh water, pesticide loading in fish, pesticide loading in sediments. That is the bottom part of our lakes and rivers.
Okay.
We found out that there are thresholds, there are standards that we might need to practice in our fishery. So, as we do this work, let us also know that we are a global family.
Yeah.
Whereby we have to follow World Health Organization standards, NEMA standards,
right.
Food and Agriculture Organization, FAO standards, European Protection Agency standards. So let us not do so much of our human activities upstream or shoreline activities, urbanization, solid waste, liquid waste, which affect our blue economy potential.
So if I understand well, Dr. Nyakundi is...
Nyaundi.
Sorry, is before anything else, before we unlock the value chain, we have to deal with the challenges that are there, or else we'll not even have products for us to be able to, you know, to create value chains for, if I get you right.
You're right, Chair.
Okay. Right. So we will continue with that conversation right there. And Dr. George, I'd like to talk about industrial parks. Oh, I called you doctor. Yes. Good. I've given you a title, yes. I think it's because there are so many doctors in the house. But we have industry parks, yes, but they focus more on large companies and multinational, corporations. And there was a question about, we focus on the ones that are beginning, the ones at the end. But in between, how do they get to benefit, and how can the development of industrial parks and special economic zones be reworked for MSMEs?
Yeah, thank you. And I hope I'll get the doctorship.
Please
soon.
do. It's a queue.
Thank you. I think, to be honest, it's a very difficult point to address. One, because businesses exist, among other reasons, to make money.
Okay.
And that means that your businesses have to be profitable to survive, first and foremost. So for this to work, at least in the immediate, you need social capital. And that social capital, even if you go to the Far Eastern countries, Middle East and all that, there's a lot of social capital that comes into the promotion of MSMEs.
All right.
But having said that, it's not something that cannot be done. And to be able to integrate MSMEs into the industrial landscape, into the industrial platforms, I think there are a number of things that can be done, and I think that we are doing. I think within the larger industrial space, what you can do is to create separate clusters for MSMEs, so that 10, 15, 20% of what is available is given to MSMEs.
Okay.
But that also means that they need to be supported, because there's some basics that you have to adhere to for you to operate within such zones. Such facilities could be things like plug and play workshops, because these are people, they might not have the capacity and the capital to develop some of this infrastructure. Shared utilities, of course, you have a situation where not every MSME has to do their own utilities. You have shared utilities. That reduces the cost of doing business. Shared machinery. Daktari has talked about having a tractor plowing 10 acres of different, one small. That is shared machinery, and that goes towards helping MSMEs become part of a bigger or a larger industrial space. Flexible leasing, whether it is equipment or any other thing. In the earlier panel, I had somebody talking about renting expertise.
Right.
Those are things that can be done within a formal industrial structure. But again, subsidized rental models can also work. And these are things that we have done, and we have seen them work elsewhere. Some of the things that can be done is, of course, shared processing facilities. If I'm having cotton, I'm having 100 farmers, I have a common ginnery in an area. Those are shared facilities. If I need to harvest my maize, I have somewhere I can go and do industrial drying. So I have my 10 bags. Somebody has 10 bags, 20 bags. We have industrial drying. I think these shared processing facilities will also can be provided within an industrial setup, so that SMEs also benefit from shared facilities. These are things that have been done in countries like Vietnam. They're very successful. Another one, there was a program that the current government put in place, which is the country aggregation packs. Something like that.
Yeah.
This is a good thing, and this, I think, plays very well into the MSME structure. I think these country aggregation parks can be used as a forerunner to the main industrial zones, that then we have a natural transition from smaller parks into the bigger parks. But I think the other facilities that can be provided within this park, like business development support, things like what I have said before, export compliance, certification and testing, packaging, design, financing, and of course, digital marketplace, which I think is something that AI can really help. I think those are the points that come to my mind for now.
Right.
But I think there's just a lot more. But I think for me, it's also on the willingness of the SMEs to adopt a long-term view and also to really have a commercial mind in the way that we do stuff. I tell many people I interact with that business is about doing something that can still run when you are not there.
Okay.
I think the mindset is that if you have an SME, then it's a business. Maybe not. For me, a business is something that you can do, can continue making money with your presence or without your presence. If whatever you are doing requires your presence, then that is self-employment, which is not business. So I think we need to transition from that mindset. I think this is what puts MSMEs at par or closer to the industrial giants that we have.
Okay. You mentioned about digital inclusion, and I'd like Dr. Hilary to take on that. And what does effective digital inclusion for the value chains look like?
Okay. When you talk about inclusivity, then you are talking about providing equal opportunities and resources to every member of the society. And of interest, usually in our social setups, we have people we have categorized as marginalized. So a lot of emphasis in this case always go to them, and especially women and the youth. Okay. And of course, people with disability.
Yes.
So in many of the existing systems, they lack the access to equal opportunity and resources.
Right.
So when you talk about digital inclusivity, then you must drive it. I know we are talking about business ecosystem, but we also have something called the digital ecosystem.
Okay.
Okay. And digital ecosystem is now the platform that provides inclusivity for all.
Right.
It has 3 components, which I will drill down.
Okay.
And try to explain what that means. So we have the first thing, which we call the digital infrastructure.
Okay.
And this is like the platform that provides that opportunity for every digital solutions to run on. Okay? So it comes one with the connectivity.
Right.
The connectivity that you have around that is part of the digital infrastructure. Do we have that platform? It is not something that can be set by an individual. It must be something driven by the state because it is a public good.
Right.
So during Kibaki government, you saw them talking about fiber optic running from one country to another, from one town to another. That is part of the digital infrastructure.
Okay.
The other part of the digital infrastructure is the affordability. Affordability in terms of the gadget itself, the airtime, the cost of data, and all that. Okay?
Yes.
Do we have favorable cost of data? It is somehow difficult to, alienate and say men will be buying data more expensive than women and youth, but it is more of a policy kind of things. And I saw somebody from KR here. The taxation regime that is loaded onto the airtime and data. Is it something that is actually excluding some people from accessing this kind of services?
Right.
Because the moment you load more tax, the moment you make it more expensive, that farmer that was required to access information is not able to access because they're not able to afford it. The other part of the infrastructure is the digital literacy. Okay? Are you providing an education system and platform that allows all your citizens, despite of gender, age, or whatever, to be digitally literate? Okay? That's another component of it. What are you doing in terms of policy to lift up those who are not digitally at par with everybody else? The last bit of it is the digital security, interoperability, and competitiveness.
Right.
Okay? That's another aspect of the digital infrastructure. So the second part of the ecosystem, the digital ecosystem, is what we call the digital economy. Okay? Are you, by design, allowing your digital economy to grow what we call the digital talent pool?
Okay.
Okay? Because the digital component has so many bits of it. Are you providing an opportunity to grow a digital pool of experts that is going to drive this component?
Right.
Okay? Number two is the environment. Are you providing a business ecosystem that is able to encourage tech startups? Okay?
Yes.
If you look at us right now and you look at Rwanda, everybody's running to Rwanda.
True.
What is that Rwanda is providing that we are not
We are
providing?
not providing them.
It's all in policy. Okay? And all this has to come from the government. Okay? It is not
It's
an
a main
individual.
stakeholder in this conversation.
Yeah, because it's all anchored in policy. The moment you have policies that don't favor the digital component of it, the digital ecosystem, then you are actually sitting on the gold. Okay?
Okay.
The third component of the digital economy is the digital trade.
Right.
Okay? Are you providing legislation that allows digital trade and e-commerce? Okay? Adding to that is, the digital payment system. We are very good at digital payment system. We're also very good at e-commerce platforms.
Right.
We're also very good in providing digital trade. But are we good in providing digital startup environment? I leave that to you. The third component of the digital ecosystem, which again allows for inclusivity. You asked me about inclusivity.
Yes, yes.
Is one is what we call the digital society rights and governance. Okay? And when I want to speak about this, I want to use the latest example with our neighbor here.
Which
Someone
one?
here.
Oh,
Tanzania.
Tanzania. Oh, during the...
Yeah, so one of them is the digital rights.
Right.
What level of space do you have as an individual within the digital space? What are the rights that you hold? Okay?
Right.
Or is it a space that if you imitate the president and put on TikTok, then you are charged with treason? Okay? So
also I feel like there's a gray area when it comes to digital. Is it because we are still developing as a country and we are part of the what I call quote unquote third world, but there's usually a gray area when it comes to defining what is what in the digital space?
It is a new area.
Yeah.
And not even the developed world has defined all this.
Right.
Okay? So it is an evolving industry in which we will still continue to learn more and bring
as
in
we
more
go.
component. So the other part of the digital society rights and the governance is what we call about the digital repression. The other one is what we call the internet governance, switching off the internet and all that kind of things. Okay. Then we have the civil society and the media. What freedom are you giving the civil society and the media to help this sector to grow?
Okay.
Then lastly there is what now we call the digital governance. So those three components are all revolving around the digital. They are the things that defines the digital ecosystem.
Right.
And they are the things that defines, within them is where you draw the policies that governs these components of the industry.
Okay.
If you don't get it right, all those AI things we have been talking about,
they will not happen.
Cannot work.
So we have to do the digital everything and inclusivity so that we can advance with the AI.
Same as the business ecosystem. If it is not right, no business can go on.
Can coexist.
But our sector, which is AI, revolves around this, and AI again cannot exist on its own. AI is a component of the business ecosystem. Information is a component of the business ecosystem.
So they are codependent.
So we are a subset of this. We are a subset. We are one of the enablers of anybody who wants to do business. So when you talk about agriculture, doing business in agriculture, we are just enabling you using technology to eliminate so many players along the chain, to help you reduce your logistical costs, and to help you find the market, okay, and produce better quality products for sale.
All right.
Using AI.
Okay.
Yeah.
All right. Guys, allow me to borrow 10 minutes from you. Have you allowed me? Yes? Have you proceeded well? Yes, so I borrow 10 minutes from you and then we break for lunch. And I have one more question for Dr. Nyaundi. So when we hear blue economy, we talk about fishing and aquaculture, but are there some more opportunities for budding MSMEs, and especially for those in the rural communities?
Thank you for that question. Micro, small, and medium enterprises, when it comes to the blue economy, are various, and this can be improved. If, for example, we look at Aten, we know we have areas where we can do fishing. Yeah. Our water systems, for example, let us look at China. It's number 1 in the world practicing aquaculture. They even use rivers. China. One of the largest rivers in China is Yangtze-Kiang, where I was, can I say, lucky or able to interact with one of my colleagues, a Kenyan, who went for some further studies in China.
Right.
Chinese are blessed in the way that their rivers are so wide. Like from here to Kiboswa market, there is just a river. So they have several cages in those rivers. Coming back to Kenya, we have Aten fish ponds. Can we encourage our, SMS, micro, small, and medium enterprises, MSMEs, who come from this upcountry, Kericho, Kisii, Nyamira, even Migori, parts of Homa Bay, where we have, can we say, suitable areas where they can do this fish growth.
Right.
And from here, we look for them, we improve the value chain. What is important is we improve the value chain. The fish that we get from Lake Victoria, our largest water mass, is actually sold up country. Can we improve the value chain of this fish? Even omena goes upstream, even up to Kericho, even up to Nairobi. You find omena in Mombasa. It does not grow in the marine waters, but we find it in Mombasa in the supermarket. So what we can do, Chair, is to improve the technology of handling the value chains.
Right.
Let us make use of, can we say, green energy?
Right.
How can we use green energy to improve the value chain? How can we improve the marketing of this fishery? How can we improve the production going all the way up to the time the fish is on your table and you are eating it?
Right.
Let us bring in technology. I'm happy my colleague here is talking of AI. What is AI? Artificial what? Intelligence. Artificial intelligence is actually so wide. I want to use this opportunity to encourage the congregation who are here to go home and ask themselves, what is this AI? AI, I've realized that we can't ignore it.
Right.
We can't ignore it. And the country, the government, the national government has brought in the fiber optic all over our county government headquarters. We even have internet hubs. I remember seeing one of our CS, allow me to mention Eliud Owalo. He has gone through all these counties, actually trying to make sure that each county headquarters or even sub-county headquarters, they have what we call internet hubs, where the youths are practicing a lot of this technology.
Okay.
So how is technology going to improve to help us? We have Internet of Things, what we might call IoT. I heard my colleague mention a lot about it. What is this IoT going to help us? Maybe we can use sensors,
Right.
which, and also real attributes of real-time information,
Yes.
which can help the value chain, especially in the marketing, to share the prices, yeah, so that on a daily basis, our fish traders are able to capture the price on that day, so
Yes.
that it is not the brokers who are going to gain, but along the value chain, they have the information which they use to improve their sales.
Okay.
And also, when we look at cross-border trade, let's not ignore cross-border trade.
Yes.
We have Kenya, Uganda, Tanzania, even South Sudan.
You're right.
Let's look at one fish species. I'm talking of tilapia. Because mbuta, which is Nile perch, is mainly for export. We get very little of it.
Okay.
I don't remember the day I took a fillet of mbuta. Because much of it is what? Is exported. Now our SMEs, small, let's say, let me call it micro, small, and medium enterprises, MSMEs, are looking at tilapia right now. Because now it is growing either in the lake, wild, or in the cages.
Okay.
How is this going to be useful, the technology, which has been mentioned here?
Right.
How is it going to help us? It can be used for monitoring, for forecasting, for management decisions. Because, for example, he has not mentioned about, let me say, satellite.
Okay.
Yes,
Yes.
satellite imagery. This is also going to help the main water systems like Lake Victoria, Lake Baringo, Lake Naivasha, where they also have very abundant fisheries.
Okay.
Lake Turkana, which eventually comes into the inland. So let us look at the inland only, that they don't have large water masses, but we can improve the value chain along from the production point. That is, for example, locally we have the lake here, Lake Victoria.
Yes.
So when we look at the value chain, we look at one species. How far does it go inland?
Okay.
How much does it fetch? How much of it is going across? Like, for example, across border. When we look at Lake Turkana has viable amount of fishes.
Yes.
I urge you guys to walk out to Lake Turkana up there and try to start some economic, program where you can actually sell the fish from Lake Turkana all the way to DR Congo.
All
It
right.
is a potential market.
Yes.
So if you can now start cross-border trade, you will actually gain much more money than even the fisherman who's in the lake.
Thank you.
Why is that so?
Yeah.
So just to sum up what you were saying,
Right.
Internet of Things is going to help the micro, small, medium enterprise person who is here and the one who is outside, not attending this one.
Okay.
Yeah, please
Thank
let us try to look at technology as part of improving our blue economy. We may even need what we call biodiversity monitoring
Right.
by using what we call blue carbon restoration
Okay.
and green carbon restoration. That is possible by using technology.
Thank you very much.
Thank you.
Dr. Nyon, even for building up on Dr. Hilary's point. So thank you very much. But I'm sure, do we have questions? I feel we have full house. If you have, I can see hands are already going up. Please, a warm round of applause for our panel. They've done quite an amazing job. I wish you had more time, but I really want to give this time to anyone who has a question. Please lift your hand up. I can see a hand there. Then microphone will come to you. There's a gentleman right here.
Okay.
Please, maybe we can stand up so that we can see you a bit further and mention your name and tell us what you do.
Okay, thank you. My name is Dennis.
Yes, Dennis.
Finance Director, Eldosin Rubber Solution.
Right.
And good afternoon.
Good afternoon.
I have a question, especially to Mr. Mr. George.
Oh,
our
Laka, yes.
panelist. Yeah. So, Mr. George, I've tried to listen to your presentation, and as a youth, I only wanted to ask you that maybe you tell us, we have discovered that most youths are not participating in agribusiness, most of them.
All right.
Can you maybe tell us what are the barriers, what is preventing them from participating in agribusiness, and maybe what can be done so that the youth also be part of this conversation? And also the final question to Dr. Hillary, because as a researcher, I've heard that you have done an extensive research in business, agribusiness. My question is, do you have innovative financing models being adapted in agribusiness that are going to help, especially those people who have ideas, but maybe they don't lack the finances to maybe do a startup in agribusiness? Thank you.
All right, thank you. Thank you so much. Do you have another question? Or we can answer those two first. Where? And there's a hand up. Somewhere, yes, being blocked by the camera. Okay.
Good afternoon, all.
Good afternoon.
My name is David Ogoro. I'm representing Kenya National Association for the Deaf. I'm happy to be here. Thank you very much for the facilitators. I have a question on Dr. Hillary for mentioning issue about inclusivity. True, in the area of business, people with a disability, mostly deaf and blind, have issue and challenges on accessibility. So, I get to the interpreter. I want to read the questions from David.
Okay, go ahead.
PWD entrepreneurs, especially the deaf and blind, regularly bump into accessibility gaps that hold them back from competing on equal footing with non-disabled peers. What concentrated steps, policy, technology, training, finance, etc. can we take to close those gaps and level the playing fields? Thank you very much.
Thank you very much. So one more. Oh, wow. 1, 2. Okay. Can we do that? And we can, or we answer that first so that we don't forget. Or you want we take them? Okay. Right. Sorry? You want to answer it? Okay, go ahead.
Many thanks. So I have 2 questions on the availability of credit for agriculture. We have players that provide agricultural credits, including our well-established banking systems like KCB, who is a partner here, and ABSA. But, and we also have some micro credit initiatives that exist in the market. Some suppliers also actually provide credit, like One Acre Fund. So they are quite a number. But the first thing that research has shown is that when you want to operate on agricultural credit alone, then it will not make a lot of business sense for you. So if KCB had 1 million shillings to disburse to farmers, and then they want to disburse it to 10 farmers, maybe 100,000 per farmer, as opposed to if they have another business person who also wants 1 million shillings, they find a lot of economic sense in terms of dealing with one person versus dealing with 10 farmers, while the risks also in agriculture are so high, so they usually tend to give more money to other businesses than agriculture, even though they always list that they have agricultural loans. So it is a challenge.
Right.
But a challenge, while at the same time it is a gap. And why they are taking it like that is because more established banks only provide credit. While research has shown that when you want to be in this business of agricultural financing, then you have to bundle it with other services like insurance, agricultural insurance. So selling credit, insurance, and also having savings and providing extension. If you bundle the four, then you will make more business sense when you're now dealing with one farmer because you're offering four services. So the cost of that credit, therefore, you are only not relying on the credit alone, but you're also getting you're also getting some more other services and more income from the farmer based on these other ones. Otherwise, if you just go with one single line of business to a farmer, it might not necessarily make business sense for you, and then you rather look at the other way.
Okay.
Answering to the PWD question, I think efforts might have been made,
right?
But we need more intentional and deliberate efforts to consider PWDs in whatever we are doing. Because we have not done much, especially in terms of the agricultural value chains,
right,
to include PWDs.
Okay.
We have done maybe some things to look at women. Actually, women have taken the bigger share.
Right.
Until now, they are overtaking the men. And the youth, we have also done something, but not so much.
Yes.
My friend has a question
on the youth.
On the youth inclusivity. I will let him answer that. But there are more and more opportunities for the youth to engage in agriculture. It is more of telling them what they have as a resource and where it should fit in the agricultural value chain.
All right.
Yeah.
So we still have some journey to go when it comes to including PWD, especially in the agriculture sector.
We have a journey to go in terms of including PWDs in agriculture, but the youth, the opportunities there, it is them to grab.
Okay.
Yeah.
George, you want to take that? So then we can do two more, then we call it a wrap.
Yeah, thank you for the question. The youth factor tends to be a catch-22 situation because, as he has said, the opportunities are there.
Yeah.
Maybe the youth need to come back to stakeholders, let me use that word, and specifically let them know what is it that is preventing them from taking those opportunities. Because when I was young and food was put on the table, it was there for everybody.
Yeah.
But some children ate, some didn't eat. So what is it that prevented one or two not eating? Maybe you need to tell the stakeholders that. But I think the model that I have seen in some countries work is it's a collaborative effort or a collaborative journey, so to speak. Because some opportunities are there, but then you need to facilitate people being able to grab them. And therefore we say that we cannot honestly ask the youth to go and plant maize. True. It doesn't make money. We will not ask them to go and plant sukuma wiki. And I think that, to me, is not what agribusiness is all about. Agribusiness is doing business in agriculture. And I have said earlier, if you wake up every morning and you have to go to the farm for you to produce your cabbages and all that, then maybe you are in self-employment and not agribusiness. We need to find a way, and maybe this is a leakage. If you have the business sense why don't you become an aggregator, for example? A lot of farmers with small holdings have a lot of harvesting. They harvest millet, they harvest potatoes. Why don't you form a group to be an aggregator?
Okay.
And therefore, that now becomes a business as opposed to you going to the farm. But the good thing is that as you become a bigger aggregator, then you can even talk to these farmers and tell them, like, you have 1 acre, you have half an acre, you have 2 acres. Let's aggregate this farm.
Okay.
Let's do mechanization. So Kenya and Africa is talked of as having a vibrant, educated youth potential.
Right.
But that output is not being seen in the number of ideas that are being generated. So it's not about you picking up a djembe every morning and going to the farm. It's the ideas that you bring in that make that effort worthwhile at the end of the day. So it's a collaborative effort. There's no one single bullet that will be used to slaughter this monster of unemployment, of youth not going into agribusiness. Let's all work together. Rivertex is being revived. How can we look at the cotton value chain to act as an anchor to the youth going into the agribusiness? Develop an app. Develop something that will assist the farmers to do proper propagation of cotton, of seeds that can provide oil, seed oil. There's a lot. It doesn't mean that you have to go to the farm to plow. You have the mind, the technology is there to develop something that, plugs into that role and makes you economically relevant in whatever is happening.
Right. We can take the one here and the other one, then we can call it a wrap. One more. Cynthia?
Thank you so much. My question goes to Dr. Hilary. I appreciate the fact that you acknowledge that production is being affected from the farm level of it by farmers, but then you realize that most smallholder farmers, they are not yet digitally fit, and that means that they are still not able to take the AI technology into farming. So how then do we make, or do we ensure that smallholder farmers are AI enabled to enable us when the manufacturing to minimize issues of standard and compliance? Yes.
Thank you.
Thank you. My question goes to Dr. Nyaundi. You really encouraged us in setting up fish farming plots away from the lake, and especially on land fish ponds. Now, the main problem that fish farmers are encountering includes access to the market. Because mostly when you take your fish to the market, people prefer the lake fish than fish from the ponds. And yesterday we read an article about the E. coli disease in the fish, a research done by Jaramogi Oginga Odinga Hospital the other week. I would also wish to get your comment on that.
Okay, thank you. You can take that, and then Hilary, then we can wrap up.
Thank you, Chair. That's a good question, my colleague from the NSSF. Actually, you have really brainstormed all of us. It's not me alone. Your question is just like you have brainstormed. I was saying from the beginning that the aquatic ecosystem, that's the water column, is bound to receive all the contaminants that are from human activities. So fish, being at the lower part of our lands, are liable to get contaminated not necessarily in the tissues, but even just on the skin. Because I saw the information was about bacterial contamination.
Right.
And this can be from emerging contaminants. Let us not forget that we have what we call emerging contaminants, which obviously we used to assume to be just, they are not there. For example, what are these emerging contaminants? Like pesticides, as my colleagues mentioned, pharmaceuticals. The hospitals, they may use the kiln to burn whatever they have, solid waste, but they also have liquid waste. Eventually goes to their wastewater lagoons within the compounds. Even tea farms, they have wastewater lagoons. At the end of this, when they fill up, they run what? Into the streams, into the rivers. And where do these rivers end? In our major lakes.
Yeah.
So even if you look, let's say, Lake Nakuru, or you look at Lake Naivasha, Lake Naivasha, they have rivers which, and there, although they have no outlet, I'm talking of Lake Naivasha. Lake Naivasha is assumed to be a big fish pond.
Right.
Lake Nakuru has also rivers that run into it. As Kemfrey, I can just say that, don't quote me, because I'm not the CEO of Kemfrey.
Yes.
I'm representing him.
Yes.
Lake Nakuru fish is good, as according to Kemfrey.
Okay.
But when the report is coming out,
right,
it's for reasons that the national government wants. They say the fish is not good. According to our water quality analysis of Lake Nakuru, the fish are good. So my colleague, NSSF, contamination of the fish in our lakes is unavoidable. But what is the threshold? We have standards, NEMA standards.
Right.
We have, as I said, WHO standards.
Right.
And so much of our fish is within the acceptable standards.
Okay.
So the university can find the contamination is there, but we look at, is it
The
within
levels.
the acceptable standards? So pharmaceuticals, we have fertilizers, we have other unavoidable human activity refuse or wastes that end up in our water. For example, when we talk of E. coli, you mentioned E. coli. The presence of E. coli does not necessarily show that the food is toxic or the water is toxic.
Right.
No. It can be there, but at what level?
So,
yeah?
Okay.
What level? What is the standard acceptable level of this E. coli? Going to the next question you are talking about the upstream. That is dealing with the test preferences.
Yeah,
some percentages of the market don't mind about the test. They just eat fish. They just say, the children will cry and they say, Mom, Dad, we want fish. They may not really worry about the test, but they will buy the fish. So what we might want to study is the socioeconomics implications of our value chain. If a certain section of the society wants a preference of some test, we can as well improve on that. That's a gap. That's a gap whereby micro is this size, small is this size, medium is this size. So which means you come in at some level. Micro is maybe even the eyes don't see. That is where now the technology comes in.
Okay.
So to finish off,
right.
I just want to say that make it as a gap.
Okay.
Go out, get the fish from the lake, sell to them. You'll make money. Those who don't mind about the test, sell them the fish, and they will eat.
Okay.
So let us not sit down and relax.
Okay.
We have opportunities to make what?
Money.
Make money.
All right.
Yes.
Dr. Hillary.
Thank you.
Thank you
Chair.
very much.
Many thanks. My question was from
Cynthia.
Cynthia, the
Yes.
tomato processing. And our question was on the farmers that we have are not technologically enabled, and therefore where do they get this information? Before I answer this question, I want to tie it to what my colleague was speaking about, George, and the question that he was asked about opportunities for the youth. And if you want to do business, you have to look at your strengths and the weaknesses. So the weakness we have here is that majority of our mothers and grandmothers who can do for us potatoes down there do not know how to use technology to access information, right? But amidst them, they have youths who have smartphones and spend 3 to 4, 5, 6 hours on TikTok every day dancing. Okay? And these people have the ability to access this information. So if my mother is here growing tomatoes and she doesn't know how to access this information, and I'm here dancing on TikTok, while I have the ability...
Selling everything.
Yeah, I have the ability to access this information. So it is an issue of youth realizing that they have an opportunity which they can use to make money other than the entertainment industry, and pick that opportunity to fill the gap. So if I were you, for example, I know where you are coming from, you can mobilize 20 women or 20 farmers to be planting for you tomatoes. You know the variety that you want, right? You know the standards that you want to meet, right? You can take the opportunity to learn more from our AI solutions, okay? Have a meeting with them, and as they grow, not just teach them how to grow it, but even how to coordinate their production so that you are continuously supplied throughout the year, okay? As this goes, it has to come from your initiative, and this is what I was talking about. Youths have huge opportunity in agriculture,
right?
But they only need to realize and pick it up.
Okay.
Yeah.
All right. Wow. Can we give a warm round of applause for them? Hasn't it been amazing? Yes, so thank you very much. We really appreciate your insight and your time. And I think this is the point where we get a group photo, our media people. Brian, I know that we were to go for lunch. That's where, but before that, I understand there is a business clinic hub for training on investments in readiness for policy and insurance digital at the exhibition area. So we have training from Wild, KRA, AAR Insurance, and Zoho Kenya. So once we're done with lunch, we can, you know, just go there and check out the exhibition area, right? Okay, so I may request you guys to be up on your feet so that we can take a photo. Thank you very much for doing this with us. Na kutupatia masaa kadhaa ya kuendelea, because I know what we are talking most about, which is food. We really, najua tunahisi njaa. Naomba we can be upstanding. Wonderful information. And also to clap for yourselves, you know, for being a wonderful audience. Thank you so much. I think this is the point where I say we go for a break. Then we are going to resume for 2 more panels in the afternoon. I know we have a conversation about youth and everything digital. And we have a conversation about sustainable future, because we can't talk about all this if it's not sustainable. So go fill up and come ready with all the energy for the 2 panels in the afternoon. Thank you very much.
much.
Check. All right, ladies and gentlemen, lunch is exactly 1 hour. So please let's settle in by 2:50, yeah? Yeah, let's settle in. Yes, back here. By 2:50. So 10 minutes to 3 p.m. we start. I don't want to keep you here more than 5 p.m. Sawa.